Good morning, everybody. Thanks very much for joining us, and welcome to this session of a kind of global European outlook series that we're running for 2021. And this one is very much focused on France, giving you the perspectives both from the French market on France, but also the perspective from Paris on the general European markets as well. For those who don't know me, my name's Richard Betts. I'm the publisher at Real Asset Media, and this is a Real Asset live event. We run around 60, 70 of these investment briefings over the year. For those who don't know Real Asset Media, we do lots of things. You can find out all about them here. And do visit the website. And we've really tried over the past sort of 12 months to launch new initiatives, keep everybody connected. So a series of special reports, Realcast, a weekly analysis of the key themes in real assets, and as well as RealX. And I know a number of people are joining us from the RealX exhibition and platform today. And so wherever you are, you can ask questions using the Q&A and also use the chat so that you can also interact with us, and we'll try our best to answer as many of your questions as we can over the time. Maybe let's start with you, Raphaël, if we can, if you just unmute and just give a very kind of brief introduction of yourself and the company. Thank you.
Hello, my name is Raphaël Tréguier. I'm the former CEO of Serge, which was the first green office REIT in Europe. I founded a company called Kareg 2 years ago, which focused on repositioning of obsolescent office assets in the Grand Paris. And so we work for large institutional investors who want to capture some value we could have by these repositioning scenarios. And so the idea is not to convert all these obsolete office assets into resi, but just to think about how we can do with this big structure in concrete, which is really part of the city, and so to think about the future.
Okay, super. And Etienne.
Former head of asset management at Invesco. I joined recently a new company, which is part of the Mullier family brands, called Nude, which is a construction for neighborhood. We currently manage around 300 sites across 10 countries in Europe, AUM being around 8 billion. And the mission is to transform those sites with a triple impact perspective, transform them into urban areas. It's about making places, organizing for mixed use properties across Europe.
Super, thanks very much. Serge.
I joined Berlin for 4 years ago in the Paris office. Berlin is a Pfandbriefbank held by the Sparkassen, so a very steady and strong bank partner. Much active in Germany, where it has 75% of its activity in the different lenders, and as well as in other locations in Europe, France, obviously, where we have strong activity, as well as in the Benelux, with offices in Amsterdam and in Poland for Poland and Czech Republic. Berlin is a strong partner. It has remained during the current crisis a reliable partner to work with. Is it in Germany or in other locations? So happy to have further discussions with all of you.
Perfect. Thank you, Serge. Ken.
I'm Ken Baccam. I work as a director at the research and strategy team in AEW. I was going to say we're split in the team between Paris and London, but from now, for the moment, everyone is in his own house. Some in Nantes, some in some east of London. AEW is one large real estate investment manager with roughly 69 billion euros of assets under management globally. In France, we manage roughly 33 billion euros of asset under management, with property diversified in office 40%, retail 30%. We have logistics, which is a big chunk, also around 15%, and we also have residential, about 3 billion asset under management in residential. So we're relatively diversified, and Historically, we still have roughly 60% of AUM in France, but we also invest across Europe.
Great, thanks, Ken. Frédéric.
I'm Frédéric Dib. I'm the founder of Mozaic Asset Management, which is a specialized asset manager and investment manager in healthcare, real estate. And we do that in France, but also in Germany, Spain, Italy, and now expanding to the Netherlands and Ireland. We are a more niche company, of course, focused on our sector. And my numbers are not as large as my fellow panelists, but we manage about 300 million of assets across the 4 geographies that I mentioned, and have advised on about 400 million of transactions. And I'll explain maybe later, the specifics of that sector and all the subsegments.
Yeah, that's great. And one of the things that we're particularly keen to do here as well as pick up the views on the general market, is also in each one of these sessions try to take a look at a different sector as well. Jarek.
I'm Jarek Morawski, and responsible for research and strategy at Grosvenor, specifically Grosvenor Europe. And Grosvenor is a significant private real estate business. It originated in the UK, and I suppose it's still most well known for its central London investments. But actually, the company is investing globally, pretty much in every region. And I'm responsible specifically for continental Europe, and within the EU. We invest in Spain, Sweden, and France at the moment, and across a fairly broad asset range or asset class range. So we have offices, retail, residential in our portfolio. So and both core and value add and development. So it's a fairly wide scope.
Jarek, I just wanted to pick up with you in terms of the sort of broader economics. How are you seeing that kind of 2020 going into 2021, particularly for France, but also feel free to compare that with Europe if you want.
Well, no doubt 2020 will be a year to remember, and it will have its place in history books, both in terms of generally pandemic, but also in terms of economics of what was going on and what was happening was quite unique. From what we've seen, the world slid into the worst recession in the post-war history, at least, from one of the worst on record ever. And at the same time, there was an unprecedented range of measures taken by governments across Europe, across the world to counter it. So even though in terms of statistics it does look quite dreadful, I think in terms of raising unemployment and corporate fallouts, there's still not that much that we've seen. And actually, if you look at statistics, levels of bankruptcies were among lowest ever in France as elsewhere. So in this sense, I suppose this is something that economists will be writing a lot about. And 2021, at least for now, is just a continuation of what we've seen. It's very much a similar story. We're going into a second, third round of lockdowns, and probably the biggest difference is this bright spot on the horizon that vaccination is proceeding with some hiccups, but nevertheless, and generally the expectation is that by summer we will be coming out, and I definitely would expect a quite strong bounce back. And we've seen it last year over the summer. We will probably see it even more so this year when restrictions ease, when vaccination takes shape. That will certainly be the case both in France as across Europe. And to be honest, I was quite surprised how aligned the evolution of the European economies. Where there were some outliers. Obviously, Sweden took their own way and was therefore hit probably somewhat less. But generally, with some variation, there was a significant level of restrictions across all countries, and with some variations, probably most of Europe is facing similar problems. And I suppose France is again here very representative of what we're seeing in other markets, except for the Nordics, maybe Sweden specifically.
Okay, good. And Raphaël, in terms of the obviously 2020, very challenging year in all senses. How do you see 2021? What do you see as some of the key themes that are going to be driving markets?
One of the things that really hit France in 2020 was the fact that beyond the COVID, we have this this municipal election, which totally frozen the development market. And so, which on the other side, we could say it's a very good thing because there's roughly 1.5 million square meters of office to be delivered, which are unlet as of today and will be delivered over the next 3 years. And so that we totally vacated the obsolescent office assets. So I think that will happen in 2020 will be maybe a lot of opportunities for the value add segment due to this old office asset that will be vacated because the tenants will months after months have more visibility on the way they want to organize internally and what will be the need. And they will definitely go to this brand new asset, which are, I would say, up to standards. I think this will be one of the key things for the next year.
Okay, so repurposing some of the older assets, that's office stock especially. Okay, interesting. Ken, what's your sort of take on that? Do you see that as an opportunity? Are you seeing more kind of opportunities in the value add space than core? What's your sense of that?
To react to Cyril's slides on the investment market, I think that one of the first points that we have to that was striking is that Paris office market remains one of the largest market. Basically, it's ahead of London, obviously, but it's surprising to know that it's also ahead of New York or Seoul or Tokyo. So in terms of liquidity, in terms of depth of markets, the Paris market and particularly the Paris office market remains very large, and especially the core side. This being said, obviously, there's a difference between the cautiousness that we see in terms of office investments because of COVID, because of work from home trends, because of, as Raphaël mentioned, obsolescence. And it's actually a good thing that supply has been limited, and it somehow compensated the take-up fall. But on the other hand, so you have a decrease in investments on an absolute term in offices. And on the other hand, we saw that industrial, residential, we didn't mention residential on the slides. There were good assets that were favored by institutionals, but there's limited supply. And I think that would be the difference between the cautiousness we see on office, which remains the largest office market, but willing for diversification, which is for the moment limited by the relative smaller markets of alternative assets, industrial and residential in particular.
And Frédéric, obviously, Ken mentioned their alternative assets very much within your kind of remit there. Healthcare generally, senior living has been growing over a period of time. But do you see this as being accelerated by the crisis? Are you beginning to get more interest in it as an asset class? What's your sense of that?
Yes, definitely. And it could be also counterintuitive because, of course, the nursing homes in particular have been at the center of all of this mess. But at the same time, I think people have realized, the importance that it had. And so that's point number one, being, on top of every news, etc. I think people are thinking about it. Number two, what my fellow panelists were saying, we're talking about need for diversification, question marks over office and over retail and over hotels as well. So need for diversification, and as Ken mentioned, there aren't that many sort of areas to diversify, and a small shift in the very large office market, of course, means a lot of additional capacity going into our sector. Of course, the potential issue of that sector is the lack of product, actually. It's not that there aren't that many needs, because as you know, we have committed reports on the French senior living market and the German senior living market, and one of the striking conclusions of both were the clear need for extra capacity, and there are a number of new products coming to the market. We've had counted 250 new assisted living in coming to the French market in the next 3 to 4 years. And of course, this is going to be these are new products, so requiring administrative, planning, permission, etc. All of these would have been sort of slowed down by the COVID. So I think, yes, there is extra interest. And the interesting thing also is that there is interest coming outside of the traditional geographies for these types of sector. I think, as Cyril was mentioning, and it was particularly true for healthcare and senior living, it was mostly domestic investors. But now we see, German investor coming to the French market. We see Scandinavian investors coming to the French market. I'm talking to Middle Eastern investors, which is quite surprising for that sector, at least. I'm talking to Asian investors. Of course, they like to look at Germany first, but French is maybe the next step. Some of them, the Scandinavian one, favor the French market on the senior living side. But anyway, so I would say conclusion, yes, more interest, diversification of sources, but maybe, as Cyril was mentioning, counterintuitively, there will be maybe a lack, a sort of a drop of volumes potentially in 21 because of or 22 actually, because of the the slowing down of the administrative processes.
Serge, obviously you're focusing on the financing side. What are you seeing both in terms of, I suppose, the appetite for investors looking for financing across the sectors, and also the strategies?
I think we have lived a particular year in 2020, and obviously we still have maybe 1 or 2, maybe 3 years of a difficult economic situation in France. So that has to be kept in mind. We are not over with it. So I guess in those turbulent times, one of the main trend is that the banks are being more cautious, and there is like a flight to quality on assets, on locations. So from what I have seen on my side, the easiest deals to finance were the core deals, very well located, as well as some value add, but the location was then very important. Logistics has remained very strong in 2020, and I think will continue to be, given that some other sectors are more difficult to invest in currently. Taking, for example, the hotel industry, which has been impacted very strongly. I guess if we talk about the hotel industry, it will be for a certain period. As soon as people will be able to travel again, it will pick up quickly. But currently there is a focus on I guess on core transaction and very good locations. In terms of trends on the banking side, what we can keep in mind is that we are still, and I guess for some time, in a low interest environment, which is for the benefit of the investors. And for that reason, one of the trends we see is that investors keep asking for long maturities for their loans, and actually they are able to get it for 7 or 10 years, for instance. When you have a good assets, well let in good locations, so that's still available for investors to get good money here from the bank. I guess we are willing to have conservative LTVs. They have kept within the range of 50-60% for the deals we have seen in 2020. That's pretty normal, I would guess, given that we have seen the yield figures of core assets in Paris. I mean, when we are below 3%, I think banking, the banks are willing to keep the leverage at a reasonable level. So one of the other aspects that maybe I would like to touch a point on, and where Berlin is very actively trying to gain in the portfolio is the green aspects of the assets. I think it's also a very big interest from investors. We have seen some investors looking typically for green assets and for green financing. That's a matter of communication, but also of having good portfolios, good assets in their portfolio.
Great, thanks. And actually, it's interesting that point around the green financing side of things, because obviously, you know, things like senior housing and health also come into that impact investment side, purpose-driven investment side. And Etienne, it was interesting in your introduction of the new company that those seem to be key elements of that. Is that driven by investor demand, or why the focus particularly on that area?
A good share of personal convictions and planet alignment, you would call that probably. I think that the environment we have is, and I think Sarah's slides were quite interesting in showing the yield movements and the way it has compressed heavily from 2016, where I think we reached a sort of a market consensus that real estate was a good asset class in the context of low interest rates, and those low interest rates would remain for some time. I think currently we're definitely in that kind of environment for still the next few years, with the recovery at hand possibly, but certainly the politics not willing to kill any chance of recovery. And that means that you will still have yields which are compared to nearly zero interest rate, so a premium for the yield, which is still attractive. I think low interest rates are a catastrophe for most retirement insurance investors. They need the yield actually to fund the whole system, so they are looking for that yield. So there is still this amount of money available for real assets. Where I think it is interesting is, and that's the link with the impact investing, is that the status quo probably doesn't yield any attractiveness in terms of risk or performance. And I very often say to the teams that green, sustainable is a new name for quality. And since everybody is looking for quality, if you are actually able to deliver that sort of quality, you should benefit from the work you do on the assets. And I think the green theme is very interesting because it has known a new developments, especially with the regulators really taking care now of climate change risk, and how investors, how managers are taking that seriously, and how they cope, how they program. And one of the pillars for the impact strategy is to actually organize resilience, because the change which is coming is probably to the magnitude of the COVID crisis we've been through. We're not yet through, actually. So the notion is it's potentially money well invested in terms of performance, and especially risk-adjusted performance. And resilience is showing also as a theme that the mono usage of buildings has been questioned. Tenants are probably no longer willing to just use office space as they were using before. So they will use the office space more for meeting and co-concepting, co-imagining future strategies and implementing all those sort of things. But I would say the repetitive tasks, the execution task can be done from home, if not automated, actually, sometimes. So I think the office use will change, and you will want more animation, probably more activities around this kind of office space, and it's an interesting trend in terms of how people are actually living in the cities and how they want probably more resilience also in terms of not being forced to travel for an hour to go to work, for example. All those kind of things where you have seen the life of people evolving from 40 minutes commuting to 1 minute travel to the kitchen and and so on and so on. People are willing to breathe more, probably, and resilience is questioned in our cities overall, and will be further by climate change issues. So impact investing as a theme, I think, is interesting for investors as well, who wants to diversify and look for different risk-adjusted returns, different perspectives on value creation.
Okay, good. And Raphaël, I'm interested in drilling down a little bit more into that idea of the conversions. Obviously, in some areas, Germany more difficult than others, for example. What's the position in France, and particularly, I guess, in Paris, in terms of being able to convert those buildings? And is that a sort of more of a, it's obviously more of a value add play? Is there financing for that? What's the situation?
Thank you, Richard. I will elaborate on this issue, of course. Just one. I will add something to what Etienne just said. But remember, this environmental wave started around the 2005-2006, and over the last 15 years, it was more on the shoulders of the landlords. And in 2012, when we launched the Go Green initiatives at Serge, it was the opportunity to revisit all the internal process and the reporting with the tenants. And as a matter of fact, we already saw that it dramatically increased the pace of the negotiation with the tenants and the attractiveness of the assets. And so, whereas we have comparable assets neighboring our buildings, we had quite a good success in letting them very fast, thanks to this green approach we gave to our assets. Over the next 10 years, it will be another contract, another type of deal, because there will be a joint commitment between the tenant and the landlord by law. We have now the décret tertiaire, and it will be a kind of revolution in our sector because the tenant and the landlord have to talk about what we're going to do to reduce jointly all the energy consumptions of the building and so on, and with legal objectives. And so it will definitely change the approach of. So I think that both on the investor side, through the new ESG fund, we have a very recent ISO label which have been created in France, but also on the ground. Among the tenants and landlords, the relationship will also change. So it's very interesting, because it was over the last 15 years more a question of research and marketing, and some of those who had the courage to really visit and try to make their best finally realize that it's much more than that. And now we'll have a legal framework, and it will be very interesting to see how agile are both the landlord and the tenants to both manage the COVID, which totally changed the way we approach real estate and the way we manage the people, but also this ESG approach. So back to the conversion. The conversion is something a lot of people look at today. because we had this new Elan law 2 years ago, which have been voted 2 years before the COVID and before the municipal election. So as a matter of fact, we had a big news on this potential segment, and it totally closed a few months after. A few small advisory company which were created at this time, including Kareg, my company. But we take the opportunity of having this 18 months of lockdown to screen opportunities and to capitalize as much as possible on these screening phases, meaning doing some preliminary audits, feasibility with architects, with engineers, but also entering talk with investors to see where are their main fears, their main concerns. Is it the regulatory risk? Is it the financial risk? Is it the capex risk, and so on? And as a matter of fact, there's a lot of risk attached to this kind of project because you accumulate both the office world and the residential world. And believe me, they are two separate, totally different worlds. And but there's strong willingness to increase this segment because you know that a building has an average life of 30 years before you have to think about another life for it. Okay, so it means that technically 3% of the existing office stock have to be rethink, you know, every year. And as we saw, as we said, this office stock is more than 50 million square meters in the Grand Paris. So it means that if you have 3 or 4% every year, you have to reposition. It could be flight to quality still in office, but think of something else. It represents 1.5 to 2 million square meters of, you know, of assets coming to and you have to think about them. So it's it's a huge pipeline of opportunities for value-add investors. Today, most of them don't have the mandate to embrace the whole scope of risk attached to this kind of projects. But I think that over the next years, the final investors they work for, they will give us, me and two of the other players, the freedom to manage this kind of risk. This was the first thing. The other thing, we have a huge shortfall in housing in France. It's around 400,000 square meters for the Grand Paris itself. If you know that an average size of a flat is 50 to 55 square meters, if you multiply that by the number of meeting units, you have more than 20 million square meters of shortfall in housing in the Grand Paris itself. So it's a huge opportunity of investment now. And this is why whatever the level of the rates, whatever you sell that to the retail investors or to institutional investors, you have a huge demand. There's a strong imbalance between the demand and the supply in the resi market. It could be student housing, it could be co-living, it could be senior living. Believe me, this segment is really facing a huge shortfall. So this is why we decide to go to this market. As of today, Kareg has screened 173 opportunities, which represent roughly 10 billion euros of investment. And out of that, we will just publish our barometer. We know that a third of that have been postponed due to this, I would say, to the city mayor or the municipal election. A quarter of that have been abandoned due to the social housing, which is mandatory in some sector. Where this law, which obliged the investor to create a share of social housing in some areas where there's a shortfall in social housing. It's called the Loi SRU. So this is the second reason we struggle in making this conversion, because of course the final buyer of this social housing, they buy the units at a lower price, which could be half the market price. So of course, the financial equilibrium is a little bit complicated sometimes to find. But we are very optimistic. There are a lot of things to do here. The pipeline is huge. And so now we need more and more players to educate all the stakeholders, from the city mayor to the developer to the final investors, so we can together embrace more naturally all the risk and the skills which are required to make such conversion.
Serge, just coming to you, in terms of the opportunities particularly in France and Paris, there's obviously the Grand Paris, there's the Olympics coming up. What's your sense of that? Is that increasing investor demand at the moment?
I think we already touched this point in a previous session, and I think it keeps a good momentum. So that's always a positive aspect in the current environment. The most important aspect for us as bankers is to finance assets that are very well located, which in case they are well connected, it will match, and we can have a look. So yeah, I think it always brings positive vibes in the current environment. Maybe picking up and coming back to the green aspect. Because I see this as an opportunity for us as one of the first issuer of green bonds in Germany. We really want to increase our share of assets in our portfolio, and we clearly see that many assets are now put on the market with the green labels, which is totally normal and a must-have. Currently, one of the other aspects is that we would like to, with Berlin eventually, and that maybe we can have a chat with Raphaël separately. But residential is obviously a sector that a lot of investors have interests, and that we would like eventually to develop also with Berlin in Paris. We know that there is a momentum. We know that on the office side, there will be maybe some adjustments. We have seen some tenants already on big programs reduce their needs of square meters. That's really something we have heard on some assets. So maybe, yeah, residential is maybe a good opportunity to seize for the future. And maybe one point on the office, which is the biggest sector in Paris. I think one of the aspect that is very key today is to have flexible floor plates. I think that's one of the aspects that we as bankers look precisely in order to eventually have multi-tenanted assets.
I just wanted to kind of synthesize some of the other views, just in terms of where you're seeing the opportunities, whether that's regional France, whether that's Paris, whether it's a specific sector. Let's start just with you, Marek. In terms of the opportunities, what are you seeing for 2021, particularly looking at France? I
think generally I would agree with Raphaël here. There's plenty of opportunities in the value add segment. A lot of investors flock into core. That's natural in crises, in recessions. But even before that, we were targeting value add and various repositionings. So there's plenty of obsolete kind of older office assets that you can refurbish, you can bring up to standard. ESG, introduce ESG components, sustainability. That is something that will drive demand going forward. Conversions, by all means. I suppose a lot of these office buildings in Paris were built as apartments and converted to offices at some point, and they may not be quite in this, on the same level going forward. So maybe repositioning. So this segment feels like offering most opportunities, and we're not just talking about CBD. So I mean, Paris, including close suburbs, is generally a very attractive place today.
Okay, good. Ken, what's your sense of that?
Core will remain, in my opinion, especially core office. We haven't talked about shopping retail, but we have some hope on retail. Groceries, for instance, have done well. We're still looking at logistics, obviously, because of online commerce, but also light industrial, not just last mile urban logistics, but also light industrial, because of not every industries are going to move back from manufacturers are not going to move back from China to Europe, but there's a trend. And obviously residential, and for residential, I would mention niche assets such as senior housing, because of the yields, which is more interesting, at least higher than residential.
Okay, interesting to get that view on those, and also the retail side as well. Frédéric.
Yes, I think and as we said before, there is a lot of need for senior housing development, and in particular in the large cities, we have seen are really lacking capacity. So this will be, I think this will be really a strong aspect and requirement for that sector. Then we also have sort of more niche products around mixed use, around loss of autonomy, but maybe less, not as large compounds, but maybe smaller sort of services dedicated to older people, to children, to handicapped people, but within a larger sort of facility. So that is, I think, something that people quite like, investors quite like, but it's also always a matter of finding the right opportunity. But so I think the large segment will be senior housing in France.
Okay, great. Very interesting also that, because I know there's quite a lot of initiatives and demand as well for kind of new areas of dementia care and those kinds of things, which I think is a really interesting development. Etienne, obviously mixed use also, and interestingly retail for you. I'm picking up on that point from Ken and Frédéric.
As everybody knows, hotel was slashed by the COVID crisis, but the recovery can be there when we are over that. Retail came second. We have struggled with our tenants, but we have joined arms with them, as I would say, to organize the resilience of the sites when we could open them. Obviously, my bet about retail. I think actually when you consider the other asset classes, I would argue logistics is actually at yield levels which are pretty low. It's also an asset class that amortizes itself relatively quickly, and you need to think about the end of the lease and definitely the end of the life cycle of the asset. Office, I think the pressure of demand to nurture prospects of growth in rental values is slightly questioned, I would argue. So I think retail has eaten the dark bread, you could say. I'm sorry, it's a French expression I'm trying to translate. But it's probably a good timing for retail assets. And I would say, as far as the sites we manage at Nude, we are basically thinking in terms of mixed use. So definitely the new thing in town is residential and different types of residential, but also service, and we're pushing the boundaries. Resilience means also you need to be with a bit more nature, biodiversity in the sites, and on some of our sites we're actually developing urban farming. So that's even more niche, I would say. But I think reinventing the cities is what at stake now for the next 10 years.
Okay, great. Serge.
Banks are more conservative in the current environment, so I would guess focus on the main sectors, core offices, logistics works well as some selected retail, and maybe eventually residential can pick up. I see already with those sectors a lot of opportunities. I think the hotel sectors, as already mentioned, is a little bit down, but it can pick up quickly. I totally agree with that. It's a matter of time, and when travel ban is reopened, that will pick up. So I think there's plenty of opportunities given that we have a deep and large market in Paris and also in France. So I'm not really afraid, and the current low interest rate environment gives opportunities for banks to provide good money for the investors.
Perfect, Raphaël.
I think that if I have to summarize the three takeaways of this conference from my point of view is carbon footprint, reinventing the city, and resi. And I think that all across this road, you can find Kareg. So happy to have. But this is definitely, I think, from the three takeaways: carbon footprint, reinventing the cities, and resi. Thank you, Richard.
Thanks very much for your views. Really interesting session, and look forward to joining you at the next one. Thanks very much, everybody.